My name is Tony Irwin, and I'm with the Canadian Consumer Finance Association. We represent financial service businesses that provide payday loans, as well as a range of other financial services, including check cashing, installment loans, wire services, bill payments, and foreign exchange. Our member companies hold lender licenses for approximately 871 stores and online lending platforms across Canada. CCFA members provide much-needed safe, licensed, regulated credit to hardworking Canadians when no one else will. Last year, some 2 million Canadians took out a payday loan at an average size of $500 for a term of 10 days, and on average, they take it out 6 times a year. Payday loans are used by a wide range of Canadians from all walks of life: nurses, firefighters, office workers, members of your staff, who all are employed and have bank accounts. They're good people in a bad spot. Borrowers know the cost of credit is high. However, many people use this service who are facing an emergency and have no other options. A single mother holding down 2 jobs who has a shortfall in income this month and needs to pay rent or buy groceries for her kids. Or a senior on fixed income who can't pay their hydro bills this month. For them, getting a payday loan from one of our members who treats them with dignity and respect is a better option than paying bank NSF fees and reconnection fees. CCFA supports fair and balanced regulation and strong consumer protection measures that are already in place at the provincial level by the Government of Ontario. All of our members hold provincial licenses and pay an annual licensing fee. Loan documents are reviewed and approved by the regulator. Provincial posters displaying cost of borrowing and a cost comparison to a credit card must be displayed in our member stores, and they are inspected and audited on a regular basis to ensure compliance. The payday loan industry in Canada is not growing. Since 2012, the number of licensed locations in Ontario has dropped from 960 to 789. And with a reduction in the maximum loan fee chargeable from $21 to $15 per hundred, we expect to see more closures. As regulation becomes more stringent, 2 things happen. More locations close, and lenders will have to stop providing credit to those borrowers who have the lowest credit scores and therefore no other options. While I recognize the desire among some to simply shut this industry down or significantly reduce it, I would ask you to consider what will happen to that single mother or pensioner if they can't access credit from a safe, licensed, regulated lender, and because they have no other options, are forced to go to an unlicensed, unregulated, usually online lender instead. CCFA would instead encourage the City of Toronto to focus on encouraging traditional lenders, such as credit unions and others, to offer more affordable credit options on a scalable basis as an alternative. Thank you.
Thank you, Mr. Irwin. Questions? And Councillor Kachanis, please go ahead.
Thank you, Chair. There's a report this morning in the Toronto Star about a pay loan establishment that was paying people that were working, I can't remember the name, or just bring it up now. People were working on a temporary employment agency.
I remember the story. I didn't see it this morning, but I know it was in the media some months ago.
Would any of your establishments, or for your association be involved?
No, that wasn't one of our member companies, and that's not, I've never heard of that kind of activity, and certainly it's not something that our members would consider.
So who was the pay loan company that was? I
don't know the name, to be honest, Councillor. I'm not evading the question. I just don't know. But they were a provincially licensed company, but they were not a member of our association.
But wouldn't all the provincially licensed companies have to be a member of your association?
No, it's not
regulating.
No, it's not mandatory. In fact, the speaker after me represents independent payday loan operators. It's not a requirement to belong to our association.
So let's talk about that mother, which is the single mother that wants to make ends meet.
Yeah.
She comes in to get a loan from you, and she gets $300.
Yeah, the average is about $500, Councillor.
How much is it?
500 is about the average.
500? And
$500.
what would they be hit with? What was the...
So the fee is $15 per hundred. It's a fee-based product.
$15 per hundred.
So 15 times 5.
$75.
That's correct.
I mean, if I was to go to a bank and borrow money, the bank will not charge me more than 3 or 5%.
And if that single mother could go to the bank, she would. Or if the bank would extend her credit, she would.
Then you are facilitating the inability to go to the bank by charging 15%.
Yes.
Isn't that gouging?
Well, I guess you have to look at what the alternative is for that mother who can't feed her kids. What does it's expensive, no doubt about it. But what's the alternative if you have nowhere else to go and you need to fix your car to get to work to get paid, or you need to be able to pay for a medical bill that's not covered under your benefits if you have benefits?
So if we put you out of work, then it will be the loan sharks that it's the underworld.
We certainly, and I didn't say it because of our shortened time, but we get more calls in our office now than ever before from people who go online, they call us to find out whether the company is licensed, if they're one of our members, because either they've been scammed or they think they're going to be scammed. So either it's companies who have no intention of giving you a loan at all, and they ask you for all kinds of fees up front. So we tell people never pay money to get money, or it's a circumstance where they will get a loan, but they'll get it at far worse rates. The company is located offshore. There's no recourse for law enforcement in Canada.
You help the people avoid those loan sharks, quote unquote,
Yes, sir.
at 15%.
Yes, sir.
Thank you, sir.
Councilor Bernstein?
Thank you. Through you, do you get a lot of defaults?
We do. There are a significant number of defaults. I would say, though, that our members work with their customers on extended payment plans, working out some sort of arrangement so they can repay that loan. The initial charge-off rate and the default rate are two very different numbers because our members recognize that people are in bad spots, and simply just saying your loan's in default and not being compassionate or trying to help them out doesn't serve anybody.
Well, it's not, probably unsecured as well, so you're out of luck if it defaults.
Correct.
So the other question, I think you said it was $500, and was it an average of 10 days?
The average term of the loan is about 10 days. The person repays it in
Right, so it's
approximately
just
10
sort of
days.
get people to the next paycheck or whatever the case is. And I would assume that one of the reasons the rates are perceived as high or are high
Yep.
is that compared to a bank that usually deals with a larger loan,
Correct.
it's also over a period of time where they have that upfront administrative costs covered over a period of time, whereas you still have the same administrative costs
We do.
setting it up, but it's only a 10-day period, so it has that.
That's
is
right.
that why it's one of the reasons it's reflected in that rate?
It is. The loans are costly to there are collection costs or technology costs, the store infrastructure, paying people. There are all kinds of costs that go into it. The other one, too, of course, is our members are not accessing capital from banks to lend to their customers. So our cost of capital is a lot higher than it would be at a bank also.
Right, you're not getting the overnight lending rate.
No, we're not.
That's what you're saying. Okay, and then the last question. So I was a little unclear, though, in terms of, I know you don't want government to put your clients out of business, but in terms of this, the item before us, what's your feeling on the licensing?
Well, I think, and certainly the speaker after me will speak more because he represents smaller lenders for which paying a second licensing fee on top of what the province charges us could well make it more difficult for them to operate. They are small business people. It affects my members too, but they're larger, so perhaps it's not as onerous. One thing that I would say, and Councillor, thank you for asking, that we're concerned about is there's a recommendation that licenses be non-transferable. So if someone has worked hard, created a business, invested in the business, and then wants to sell it, they're unable to do so, according to this proposal, and I think that's problematic. I don't think that's fair for someone who may want to sell that business to someone else who wants to operate it, but under this proposal, they would not be allowed to.
Okay, so I got 30 seconds. Why do you think they made it non-transferable?
Well, I presume because there's a desire ultimately to reduce the number, and if you can't transfer the license.
That's the end game.
I presume so, yes.
Okay, thank you.
Any other questions? Deputy Mayor Rivera-Maker, please go ahead.
Thank you, and through you, Mr. Chair, and thank you very much for coming in today. And I'll have to say, I'm wrestling with the whole report and all the things that are contained in it. And you mentioned the single mother who might need some help and gets the payday loan. I'll say your perspective is having these payday loan companies actually helps the single mother.
Absolutely.
But you make her poorer by going to your members than if she went to a credit union or a bank.
If they would extend credit, I could agree with you, but they won't extend her credit.
So would you agree that, again, I would think that the best way we could help that single mother you gave as an example, if there was some way to keep her out of your stores, everyone would be happy, because that single mother would be better off financially if she never stepped foot in your stores.
I think that more options are always better, Councillor. I think more options are always better. And if I've had this conversation with United Way representatives and across other parts of the country who have said essentially what you just said. But they went further and said, but we're not there today. We'd love to live in a world where you guys aren't needed. But that's not where we are. Maybe a day will come when that's the case. But until that time comes, we need this industry because there are not options for people. There are not a range of options for that single mother that all of us in this room, or most of us in this room, could avail ourselves to at any given moment. They cannot.
Okay, great. Thank you. Thank you, Mr. Chair.
Thank you. Any other questions? If not, I have a couple questions.
Sure.
Don't you think that these financial institutions are preying on the most vulnerable people out there and people in need, the poor, the most disadvantaged, that they cannot, literally speaking, open a checking account in any financial institution?
I think that what's common amongst all people who use our industry is they have been told no everywhere they've gone. They've gone to a bank, a credit union, family and friends in an emergency situation, all of whom have said no, we can't help you. And then they're left with what do they do? And they come to this industry because this industry says yes, we will help you. It is not in our industry's interest to loan people money every 2 weeks for the whole year, to loan them more money than they can repay. It wouldn't be a good business model if we were to do that. So it is in our interest to try to loan the right amount of money to the person who comes in, an amount that's sustainable. That doesn't mean we're perfect. I wouldn't say that we're perfect. There are circumstances that should be improved upon.
We do have people in the construction industry, for example, undocumented workers, and who are doing precarious work at the same time, and not having decent people that are paying taxes, they are working, their kids are going to school, but because there is no alternative for them, the only option that they have is to go to these financial institutions, the Payday, where is if you were on the other side, how would you look at this?
Well, you know, and it's an interesting question you raised, Councillor. I mean, I've talked to people who have used the service. You know, I have gone out to stores, I've talked to customers, and they've told me their stories, and they've explained how, you know, they understood that being in this is not intended to be a 26-week of the year situation. They would come in, they would get the loan, they had jobs, good jobs, but you know, I think we could all agree Ontario is an expensive place to live and Toronto is an expensive city to live in, and it is often not enough. So they would get a loan, they would gradually then borrow less,
Thank you.
try to get themselves out
I
of
have
it.
just a few more seconds. With regards to the locations,
Sure.
why is it that these Payday locations are very close to, let's say, to bingo halls and places where the most vulnerable people go there, and they become victimized twice, not only in terms of betting, going to bingo halls, for example, but also they had to pay a heavy price by giving up or selling their paycheck in advance. How do you see that? Is there some level of conscience somewhere?
There absolutely is. I would, I guess, take issue with the victimize language. I don't think we victimize or prey upon people. We help people who can't get it elsewhere. And this is an option for people. This isn't like auto insurance where we all have to have it and we may not like it, but we have to have it. This is not the only option. We welcome as many options as possible for people. Our industry locates where people can get to, that's easy for transportation, like lots of other retail businesses where they can find space. There's all kinds of reasons, but we don't look at some of the reasons that some accuse us of doing. That's not how we decide where our stores are going to be placed.
I was referring to the locations one after the next within a radius of 1 kilometer. You have too many. My last question is, hopefully you can answer this quickly.
Sure, I'll try.
It's been legislated that the pay shouldn't be more than $15. Why is it that all the signs all across the Payday locations are still $20 and they keep on charging that? And that was supposed to be retroactive to January the 1st of this year. Why is it that we keep on with those signage out there?
Well, you're talking about the signs that are advertising for lower rates?
Which would be misleading.
Yeah. Well, those are rates that companies, promotions that they offer. Why are they doing that? Because the province hasn't said that it can't happen anymore. I would say that during the last round of review with the provincial government, we recommended that that no longer be permitted to occur. The provincial government did not follow through on that.
Thank you so much.
Thank you.